Hello and welcome to Mentor Club. Andy here. I'm joined by Noah Davidson. Hello, Noah.
Hello, Andy. How you doing this morning?
Fantastic.
I
Gotcha.
like it.
Yeah, I am doing fantastic though. Let's hop right in to disclaimer. We never gloss over this because it's so important. I'm going to start backwards and work up. All investing and trading involves risk. The issue with the market is always the same. It's always the same. It's uncertainty. I think a person can make an argument pretty successfully that perhaps the defining characteristic of markets is unpredictability, day to day and week to week and month to month. Maybe less over a long term, but even then, unpredictable. And so it's important to walk into these things with our eyes wide open, particularly when there's disruption in the world. It seems that the risk can be exacerbated in those times, certainly possible. And so that's why we don't warranty the picks we make, because we're wrong a lot. At least I am. I don't know how often you're wrong, Noah, but I'm wrong a lot.
A lot.
Not enough where I would warranty everything I do. And
Well, yeah,
so
there's.
we're going to give some
Oh,
examples that illustrate ideas, but at the top it says it's for education only. We don't. People are looking for advice all the time, and that's not what we do. So, because we know their default setting is tell me what to do, tell me what to do, we send them other places. The people that just want to be told what to do. This is a place to learn more about making your own decisions or working with your team with more knowledge and having an idea of what's available to a trader more than what to do. So with that, let's talk about the market. Um, First of all, to our students in the Ukraine and surrounding areas, we send our love to you, and obviously our attention is focused on that part of the world right now. What a tremendous inspiration. I usually don't watch the news. In fact, I have the cable news. I have to type in the number because I don't have it in my guide. I can't stand Fox. I can't stand CNN. I can't stand MSNBC because they're opinions. They're not always news. The
right.
news is always colored with one opinion or another that I have my own opinion. I don't need someone else. Even if their opinion would agree with mine from time to time, I find that distasteful. So I've had to type in the number on the thing, but it has been, truly inspiring to see the mothers and the women and the men, the children of Ukraine. It's been, it's just I haven't seen anything like that in a long, long time. And I to know that that still exists in the world, that type of bravery and that love for freedom, that it still exists, that people aren't soft. Boy, it was just been marvelous to watch and heartbreaking at the same time. Any thoughts on that
Well, I mean, it's
tragedy?
absolutely agree, 100%. When I was a young man, I had the opportunity to visit Kiev for a very short, brief visit. Incredible city and just an incredible people. And it's certainly disconcerting and worrisome to watch people struggling and suffering and the conflict there. So,
Terror, complete terror.
yep.
So that's an interesting thing to be going to the market. The market is a strange thing. I wouldn't have thought people would want to buy stocks today. I wouldn't have thought that. But often, the way the market works is if it's weird. The market can go down if the news isn't as good as they'd hoped it would be, and it can go up if the news isn't as bad as they thought it would be.
Hmm.
And I think that the biggest thing is the sanctions is, and so we'll talk. Can we talk a little bit about the sanctions? I'm sure people
Yeah.
know about it. But we really have two things at the outset that are rough. First is that for Russia on their side, what about 40% of their revenues come from energy. They're an energy exporter, and they're not an economic superpower by any stretch of the imagination. In fact, why don't you bring up a world debt clock? I think their GDP is what, a 20th of what the United States is.
Yeah, somewhere in that ballpark.
About
Yeah.
a trillion. I don't know if we want to bring it up or not. I just don't want to misquote and be wrong. But I think it's about $1 trillion is their GDP. I think the U.S. is probably like 21, 22. Is that right?
Let's see.
You got to go down a bit to find Russia. They're on here. 1.6 trillion.
1.6.
They don't have as much debt, but and the U.S. is what, 24. So they're a superpower in terms of nuclear ability, and their war machine still makes them a superpower, I suppose. But economically, they are not, and they've been stockpiling quite a bit of money to be able to fight this. Problem is, can they get to it? And I don't think Putin's worried about the financial part of this. I mean, they'll print money and print it in their own currency and whatever. But it's a fascinating thing to see him in the situation he's in, wanting to be a superpower when economically he's certainly not economic superpower. Anyway, so cutting off the oil would be brutal to him. That would be a death blow. However, it would also be a stop the economic engine of Europe and the United States. Just to give you an idea on oil, natural gas is probably a bigger deal than oil, but to start with oil, the United States, I think they pump about 11 million barrels a day. I think quite a bit, 11 million barrels a day they pump, and I think they use 17. Don't quote me on these because I haven't looked them up in a long time. So I could trade. I could be off the daily, monthly, weekly, whatever. But basically, the ratios will be right though, even if the time isn't. But I think they're 10 million or 11 million a day. Problem is you're burning 17, and as of last time I looked, now we used to pump a lot more than that, but different administrations and different politicians feel differently about the balance between energy independence and environmental damage to their own soil. Personally, I think that Russia probably cares less about damage to the earth and pollution. We know all the oil we consume pollutes the planet the same way, but I would think that the U.S. would be better at it than Russia would care. I don't know that to be sure. That's a guess. But anyway, you got Russia, who they pump about 10 million barrels a day, but they only use 3. So they can export 7 million a day. You got the Saudis, who pump about 9, but they only use about 3. So there's some exports there. Europe is really trying to do wind and solar. They're not even close yet. And they use a lot of natural gas, and they get that from Russia. So while you could cut off Russia's energy revenue, you would cut off the engine, and that would send oil prices just through the ceiling. And that would be an inflationary wave. Like, the market hates high oil. And oil is the most fascinating chart in the market, perhaps, because you have it in April of 2020, 2 years ago, almost 2 years ago, just shy of being basically, zero, $4 a barrel or whatever it cut down to, $6 a barrel, all the way to 100. I mean, that chart to me is just astounding. The volatility of oil is just crazy. So anyway, that's the energy part of it. And that's the only sanctions they haven't taken. So maybe that's why the market's up. I don't try to guess that. I mean, I don't know why the market would be up on.
I'll tell you what I've been struggling with, Andy, is I have been reading nonstop and chasing, information, just trying to wrap my head around it and understand it.
Yeah.
And I have probably not gained much clarity.
Yeah.
after spending all this time reading up and trying to understand what the sanctions are. I mean, I think you and I were talking about the ruble getting beat up, and the we were talking about like Russian stocks and index funds and ETFs and things like that, and trying to track those and see what's happening. And those have all sold off pretty hard.
Yeah. The
Um,
RX is probably like 8.
yeah, and there's not a lot of Russian companies that are traded on the U.S. exchanges, the
Oh,
ADRs, what do they call it, American Depository Receipts. And I mean, there's a handful, and then there's a couple of ETFs that invest in those things, and then the ruble itself, you don't really find on the majority of the foreign currency
I've
exchanges and
never
clearing networks.
traded it or found it. I mean, it was weak anyway, but can imagine, I mean, this is the lesson for people in the other parts of the world. It's particularly my compatriots in the United States, is the arrogance is just incredible that we think, well, the dollar's this and the dollar's that. I mean, I feel bad for the Russian people equally, because they have a leader that is, taken over he just passed a law that lets him stay in power into the 2034, I think, or something like that, 2032. And he was, they used to have a 2-term limit, and he's figured out ways to stay in power for 20 years. And he's just passed a law to stay there. So the Russian people woke up this morning and 40% of their money was gone
Hmm.
in the bank, 40% one day. And so, when you're dealing with a piece of paper rather than a precious metal or a commodity, boy, you can lose wealth quickly.
Well, what was the article I sent you this morning, Andy, about the Russian central bank raising interest rates up to
Yeah.
20%? So they
Yeah.
now have a 20%, which
Trying to
can,
fight
I suppose,
inflation.
attract foreign investment because their currency's paying a higher
Well,
interest rate.
I mean, the Fed is in the same conundrum as if you're going to have a devaluation of currency, you got to fight it with interest rate. Difference is the dollar hasn't lost 40% of its value, so you're not going to go to a 20% rate. But the Fed is they already had a hard job. And if the oil, if this thing escalates, I mean, I don't know. I think might be, my opinion is I hope there's not euphoria on the part of the pageantry and the heroism that's touching all our hearts. There's still a lot of tanks over there. Belarus will join the fight most likely, and there's another country involved, and so if you'd have told me that the market would be up the day after Russia puts their nuclear systems on high alert, I'd say, wow, that's interesting. I guess everyone thinks he's bluffing. um, I don't know whether he is. I'm not a geopolitical expert. I have no idea. I'm not weighing on opinion on it because I don't know anything about it. But I'm really surprised at the market being as strong as it is today.
Well, I mean, and again, watching it kind of rally and recover, just the extremes from last week, watching, the
Yeah,
prices drop really hard. This candle here was all bright red at one point in time.
yeah,
And then on news of sanctions, it recovered and ripped right back up. And then I was really quite surprised to see the Friday follow through with such I don't know what you would call it, just energy. And then it did get back down overnight, like it actually came back down
yeah,
and over the weekend and with futures trading. And so now we're seeing it kind of press back up. It hasn't yet taken out the Friday high. And you can see where the volume was extremely high on the pivot day, and
yeah.
then a little bit more typical on Friday. And then today it's early in the session, so hard to say what that'll end up being. But it's creating a bit of an inside consolidation at the moment, and this is still one of those times where I don't have a clear read on direction of the market.
No, I mean,
I'm expecting.
you've got uh, death crosses everywhere on your moving
Yeah.
average. I mean, you
Well,
got
I mean,
every.
yeah, it's down below all those averages, and you back it out to a weekly time frame, and this is a reasonable pullback for the market without going into like massive market correction territory. But that this is the type of drawdown we've seen in the past few times. That's obviously the big one from COVID.
It's interesting.
Pretty good size.
It's half as big, and COVID
Yeah.
was a third of the market. The problem is the market is so big, much bigger now, that coronavirus looks like a dang blip. It is concerning. It is. I still think, stocks are like Warren Buffett, in wartime. He says, look, almost every time if you had a big war, money loses value. And there's inflation and things cost more. So you want to be in stocks. You just do.
Mm-hmm.
Another interesting one is gold. We should probably take a look at gold.
It's an interesting chart, Andy.
We already looked at oil.
Yep, it's popped up, and I mean, you saw a dramatic shoot and then a correction back down. But it's testing a previous high at 1920, and you kind of put that back out on the weekly perspective. This is a massive cup and handle.
It really is.
And it's not too far off of those all-time highs. Right now, it's kind of hovering back at the highs, back in 2000. And this was, I thought, a really hyperactive gold market back in 2010.
Well, we were printing all that money there.
Yep. So
you'd think the gold would be even more powerful today. I'm not picking up gold at these prices. I'm content and enjoying the gold I've already bought. And I shouldn't even say that, because I've always said I'll never sell my gold. If I sell my gold, it's because there was no value in the dollar left to go buy food or something. Right. So I look at gold as like the emergency hedge of, I buy it and try to forget I have it. I mean, really, I do.
Yep.
So there's gold. Bitcoin, we got to look at that. Bitcoin's made a run. I thought a lot of the gold was coming from Bitcoin money.
Mm-hmm.
But Bitcoin's, back above 40 again, I think, isn't it?
It seems to be holding the support line. It's just poked its head back up above 40 at the moment, which kind of has that double bottom type feel to it. Doesn't necessarily mean that follows through. And I've got a random trend line drawn here, Andy, from a previous peak to a support zone. I mean, that's one way to. I could probably draw any trend line I wanted, really, but
you could find a lot of trend lines in there.
But that is technically a correct, ballpark. And trend lines are a little subjective because you're the one who draws them. But you connect pivot points. You always connect pivot points, and so this is also just a support zone from back here. So watching that find a bit of a bottom, and you see little spikes in volume on these. Again, this is the futures. This is a derivative of Bitcoin, not the actual Bitcoin.
Yeah, but it's close.
Yeah, but it tracks Bitcoin prices, and it's it's just up here above 40,000, which I think is a big psychological number. I thought 35 is a big psychological number.
Yeah.
And 45 is a big psychological number. So I'm watching this kind of ping pong back and forth, and I suspect it may end up retesting one of these two. I don't know which one. It looks right now like it wants to test the upside, but we'll see.
Another thing to think about back to stocks is I think we've got some pretty decent earnings announcements coming out. A lot of people are going to be announcing that, so that'll be interesting to watch to see if companies are making money in this in this time.
Well, it's an interesting kind of a mixed bag today. If you look at the little FinViz heat map, got a couple of strong leaders in like Tesla and whatnot. Aerospace and defense is nice and green.
Yeah, you'd imagine.
We talked about that last week, right? We talked about those companies potentially popping. Energy is bullish, and outside of those couple bright green spots, there's quite a bit of red out there still. So
the bears are who we thought they were. That's kind of the bears are who we thought they were. How come I haven't used that quote before? I should put that on my. I have my little. What is it?
Is that an Andy Tanner? No, I don't know. I don't think I've ever heard this quote before.
Here we go. Remember these? I don't know. I'll have to send you the video. The bears are who we thought they were. I'll send you the video. Anyway, things are kind of rolling out the way we thought they would, I guess is what I'm saying. Should we look at portfolio Probably not a lot to do.
Well, I have really been very passive on the portfolio. So like we've got a lot of our big stock positions locked down with collars. And
Yeah.
so, and these collars are good through March 18th. So we got a little bit of time left on the collars. And, some of them are big profitable positions. Other we like got Disney stock it looks like it's a big drawdown, but it's just a core position that we've been writing options against forever. And we got some Pfizer and we got some AMD and we got a couple of other stocks down that I don't have collared at the moment, but I've got a lot of the big core stock positions collared. And so they're neutral. The deltas are very, very nominal and just protected. I've been doing a lot of credit spreads and low delta positions, and we're doing really, really well on our credit spreads because we sold them way, way, way out of the money. And even with the market fluctuating wildly, we've done some minor adjustments here and there. But those are all doing extremely well, and we're cash flowing on our credit spreads. And so we're not overly concerned with the market's day-to-day movement. We're just watching to make sure we keep check on how big the ranges are. And then I've taken a few speculations on some broken wing butterflies, for example. I've got one on General Dynamics that's bullish, and I've got one on Lockheed Martin that's bullish, and both of those are winning really well. And that was a way for me to speculate on defense stocks popping without actually buying the stocks and creating a little position using options. So I mean, if you check out our little Lockheed Martin position, this is a broken wing butterfly, right? And we don't own the stock. We bought options and sold some options to reduce our exposure to risk. We started out with about $2,100 risk, and we're up $1,300, and the stock chart popped through the roof. And I suspected it might pop. I didn't know it was going to pop that good. That's not surprising in hindsight, but excuse me. But broken wing butterflies, we typically what we do is we're buying out of the money options and we're selling where we think it's going to go, profit target, and twice as many, and then we're buying some really, really cheap out of the money options to lower our cost. So the trade starts out with buying some options that were just right out of the money. We bought some 400s, and that's right here just above this resistance point. Like I thought it was going to break 400 and maybe run a bit. I didn't really think it was going to go much past like 415, 420. I thought that was our target. And so we sold the target price, and I sold twice as many of those to reduce the cost base of the options we bought. And that puts money back in your pocket, but that's a little bit bearish. And so to balance that out, we buy a higher strike price. And what makes this trade bullish, Andy, is, let me get my drawing tool back open. I don't have that open at the moment. What makes this bullish is the distance between the strike prices. So we bought 400 and sold 415s, and so that's a 15-point difference between the strike prices. And then we bought these upper contracts 420, so there's only a 5-point difference between those two. And that leaves us with a net bullish position. And we've got this delta at the moment where we've got a delta of 28, which would be equivalent to owning about 28 shares of the stock.
Yeah.
And 28 shares of the stock at $400 a share, just to kind of put that into perspective, like if you had 28 shares times a $400 purchase price, you're laying out $11,200 in a cash account. In a margin account, you need half of that. So divide that by 2, you'd need $5,600. And we've got this position on for $2,100. So we've used less capital. We don't own the stock itself. We have fixed risk reward. And we're just trading this little purple slope right here. We've got a bullish delta, and we've moved up above the theta switch point. So it's actually theta positive for us. And if it keeps running, the maximum gain will be 2,900. So we've got better than a 1-to-1 reward risk ratio. We got a little bit, not quite 1.5, but a healthy reward to risk ratio. And this is a bullish speculation. It's just a way I speculate without tying up a bunch of capital, owning stocks I don't necessarily want to own. And we did a similar trade with General Dynamics. It's popped. And let me take that off. That was virtual trade I was speculating with there. Okay. And this one we only put $495 into max risk, and we're at 450. So that's we're almost 100% return on capital used. And this was a very similar scenario. At high base on the stock chart, thought it might pop, but didn't know we were going to get that much energy out of it. But it did pop, and so we've got some modest gains there. And then we've done well with some of our energy stocks, because those were the things we really talked about that tend to move in times of conflict. Is energy prices tend to soar, and the defense sector tends to get a lot of activity. So we've got, let's see if I've got adjusted call spreads. Like we've got our Schlumberger position that's profitable, and I've got a couple speculations on it on ExxonMobil, and I'm waiting for Valero to pop. I've bought some call options on Valero that haven't popped yet, but and this hasn't been crazy bullish energy, but we have a risk-free trade on that because we caught the initial breakout and then it corrected, and we actually managed to get rid of our risk by legging into a spread trade.
Nice.
by setting that up. So we now have a bullish position with no money tied up in that. I'm waiting to see if Valero can do the same thing. I'm trying to get us into a risk-free position on Valero, and the stock price just hasn't quite popped. And so that's a pending order. That's how far it has to go to get us into a risk-free position.
Yeah. It's got a ways.
It just hasn't taken off yet. And so keeping an eye on that, and we try to manage the downside risk. But other than that, I really haven't been worrying too much about the day-to-day fluctuations in price. I do have a delta hedge on the portfolio. The whole portfolio is hedged at the moment, so we're pretty delta neutral.
Yeah.
And I've just been focusing on the cash flow positions and I've been legging into bull put bear call spreads and adjusting them into condors.
I think the delta neutral nature is pretty smart right now. That doesn't happen very often, but what I love about what you've done with this one is to be delta neutral and still theta positive is a pretty cool position to be in a heightened sense of uncertainty.
Yep.
What we have to go to the old layout to look at the total delta?
We do. We'd have to switch back to our old layout here. Let's see if I can.
I don't even remember how to do all that.
Oh, somewhere in here.
Isn't it that? I thought it was under position statement.
It is old layout.
Here it is.
And our net theta is 350. It's pretty positive. And you can see our P&L on the day is just, it's a little down, but we're relatively neutral. We still have maintained positive gains on the portfolio, and we have been whittling away at a bit of it. We took a bit of a drawdown early on with the market correcting hard at first, and we went from offensive to defense, where we were pretty bullish and had a strong delta. And as the market volatility picked up, as we got into the new year, it took us a minute to transition from being bullish to be on the defense, putting us on the back foot a bit. So we switched towards a defensive neutral posture, and we've cut our drawdown in half, so we're working our way on that. And I think we'll be positive here shortly. But in the meantime, I have no idea which way this market's going, Andy. I've been doing this for years, and I've seen other conflicts around the world, and I expect volatility. I don't know which direction the market's going to go, though.
Let's look at the RSX.
This is the Russian ETF.
Dang.
Yep.
Not a lot of room for it to fall much further.
You
don't, talk about trying to catch a falling knife, I don't know how much, it's actually bounced off as low as we got a few buyers in at the bottom. And here's the thing about trading. I try to separate my emotions from just business decisions all the time. I would not want to profit on the pain of people, though. I wouldn't want to do that. As I look at the Russian market, how do you feel about Russia? I've traveled enough that it's, I don't hate Russian people. I think that's a mistake. I think their leader is completely nuts. but there's so many good people there that are trying to go to work and businesses, and there might be an opportunity to buy, um, buy some Russia stuff right here with this, buy the ETF or the index. Um, I don't know what selling puts would be, but there's not. The reason I like selling puts on stuff like this is you're so close to zero.
Yeah.
You know,
So I'm sure there's premium in there to
it's got to
promise
be.
to buy it down at lower price. Yeah, there's
Yeah,
quite a bit of premium in
yeah.
there.
Gets paid 40. Get paid 40 cents to buy it at 6. Well, 40,
Well,
50.
you could probably get 50, 60 cents out of that, and that would be about a 10% ROI if you, and then you'd own the rush. This is the VanEck ETF.
Yeah, I mean, I'm tempted to do that simply because, um, they will. The Russian people are good people, and they'll rebuild, and they'll have to deal with their problems with Putin and all this, but there's still goods and services to be offered. People need to have goods and services over there. So that's kind of a tempting trade to me anyway, is to look at that $5 RSX, $5. Okay, let's say you sell some puts and it goes to zero, you lose $500, if you
Yeah,
do,
I mean, if you did one
if you did,
contract, right?
you lose, yeah, if you did 10 contracts, if you did 10 contracts, you lose 5 grand. I mean, that'd be an amazing loss to go to zero, right? It'd just be
Yeah,
tough.
it
And
would.
maybe it does, but what would your ROI be on that? If you got 40,
Well, if you
uh,
pulled 40 cents out of it, which I would try to hold out for,
yeah,
um, that's on the margin requirement, which is just 10%. That you're close to,
yeah.
100% return. But that could go up to that 5 grand if you're promising to buy 10 contracts
But
at $5.
look,
Yeah,
you're risking 46. Your max loss is $4,600, and you're making 400. So you're just below 10%
mhm.
on your money betting on Russia. Now, granted, it could easily get put to you. I don't see it going to zero. There's maybe so. I don't know. I've never traded this index before. I've never traded in Russia with their nukes on high alert before.
Yeah. I mean, I've traded the old BRICS contracts back in the day, which was Brazil, India, Russia, China.
Mm-hmm.
Index. I've traded the Yandex stock, the YNDX. That's like the Russian Google kind of
I
technology
wonder,
company.
yeah, I wonder how much of that is knee jerk, how much is, sanctions and everything else. But you see that little candle coming off its lows, I
Yeah.
mean, support in there.
Well, it's hard to say where the bottom's going to be, but it is one of those things where the old investor mindset. This is the thing that I've probably learned most from you, Andy, is when the world's getting bearish, or the market gets bearish. That's the opportunity to look for things to buy.
Sounds,
And yep. So
yeah, I don't know that I want to invest in Russia right now with the way things go. I don't think I want to be the guy crossing the picket line.
yeah.
But I'm going to keep my eye on this because when things settle down, there's nothing wrong with the Russian people. There's a lot wrong with their government. So anyway,
You could probably say that about a lot of governments, quite frankly.
yeah. You know what the second best government in the world is?
uh,
According to the internet,
yeah,
uh, their weather's just bad. I would consider investing in property there, but it's very hard to get dual citizenship there. Um, and they've made it harder because so many people have tried from the U.S.
hmm
But New Zealand is a pretty cool place. The problem is the weather's not very good. I don't want to live there if there's bad weather. But New Zealand they've got a pretty good government from what I hear. I don't know. They're a non-nuclear state. So there you go.
it must be nice to live on your own island.
Yeah, it's kind of get island madness, I guess. But anyway, There was a guy I was looking at property there, and the most tempting thing I saw, I just don't know anything about how to take care of it, is this guy was selling his vineyard. COVID kind of made it tough on him. So he
I
had this
thought you were gonna
beautiful
say you had your eye on a little hobbit house. I thought you'd fit really well in
vineyard.
that.
It was a full-on vineyard. And it was, those take years to get up to, where they can produce and all this. And I thought, man, that'd be kind of a nice place to retire. Go to New Zealand, run a vineyard. But then I thought that sounds like a lot of work. Learn how to do
It does.
That's what they show on the Schwab commercials, achieve your dreams. It's got some, old dude and his wife tending their vineyard. That sounds like work to me. I think I'd rather just watch the NCAA tournament. So,
Hey,
I
March
think,
Madness is upon us. There you
yeah,
go.
this is my favorite time of year, man. Well, great job, Noah. It's a tough market. It is a tough deal. And
Well, it is, and this is one of those things where, if in doubt, it's okay to sit it out. Cash is a position, although there's risk in cash too, right?
yeah, there
And
is.
so,
I I like having a little bit of everything.
mhm.
Investing is not about predicting the future so much as it's preparing for a future. And though I look at it through a broad lens of inflation and deflation, with leaning towards the inflation side, with periods of deflation you want to be prepared for. That's kind of the way I think of it. Is and
Which is over time, long term, that's kind of been that proofs
kind of how
itself
it's
out.
been. Yeah, it's kind of how it's been. And so I think you want to have a little bit of gold for inflation. You want to have stocks for inflation. You want to have debt for inflation, but you want to balance that with a little bit of cash for deflation. So inflation is, the best thing you can have in inflation is debt. I mean, that's just the best thing to have. There's no position better than debt, cash flowing debt with inflation. It's just that's one thing from Robert. If I hadn't met Robert Kiyosaki, I never would have taken that position. But watching Kenny, watching my friend Than Merrill, watching the guys that have used debt very effectively, I'm convinced that's a great way. And just mathematically, just on the financial
Wow.
state,
Isn't the whole concept you're paying off the debt with cheaper dollars as they inflate?
yeah, you're shorting
Yep.
the dollar. That's it. You're shorting the dollar. And if there's one bet that I would be willing to make, is that the dollar lose value. Now it's going to gain value in periods of deflation. And so you got to have dollars to, operate during those times. And you also want to have dollars to pounce. The thing about Kenny and Robert is they're so good at raising money. It's kind of interesting, their mindset. It's like, well, I don't need to save money because I can always raise it. Why should I go and save it when I can make a phone call and raise it? And they've got a lot of power that way. It makes a lot of sense. They're in a position, a lot of people don't get to the point where they put themselves in that, but their ability to raise capital. I mean, Kenny makes a phone call, he's got $10 million, guys waiting to invest. So the debt, the ability to borrow and then it's just interesting. Of course, it might be tougher to borrow for those guys in times of deflation where dollars are scarce. It might be tougher, but it seems like there's people always looking for investment, always looking for it. So even if the dollar's scarce, if you know how to raise it, man, pretty amazing. Looks like a downtrend to me as I look at that chart. Looks like a lot of
Well,
death.
it's a downtrend with an upward move, and it's still kind of in the little support resistance threshold.
Bearish retracement.
It's a bear retracement at the moment, and it certainly, if it continues to rise, that kind of shifts the sentiment a bit. But I would have a hard time getting bullish unless I saw it get back above that 200.
Yeah.
We use this AR high minus AR low indicator. Let me just pop it open. I've got
What's
the.
interesting is the market, there's still so much about the Fed, and the Fed in March is supposed to do their, wow, look at that.
That's a very bearish read, even though the market's green. And this is a 3-month
We
tracking
got
indicator.
dots today.
Yeah, it's clear down here, saying that there's 950 stocks.
Don't we have just
making.
blips today?
Oh, is that back up here? Is that moving averages?
Put the date over that. That is
That
last.
is, hold on.
see where that is. Yeah, get your
The
crosshairs on.
24th. So
There you go. You're right there.
yeah,
Little blips. Little blips today.
from
But
a
the
little
overall trend of that, if you look at the last, 3 weeks, 4 weeks, a lot of red.
mm-hmm.
A lot of red in that thing. So I'll tell you, I love that indicator, dude. You come up with all these cool things. I love it.
Well, yeah, I don't think I came up with that. That's something. This is one of the benefits of hanging out with smart people, Andy.
Most people don't even have the energy to type that. Okay, I don't even have coordination. My fingers aren't coordinated enough to type that symbol in. I just watch for you to do it. That's
There you
lazy.
go. So
Um,
AR high 3 months. Yep, that's you can see this indicator up there for those ones.
Last thought, the Fed is supposed to take down, back off some of their open market operations in March, right? The last announcement they made is they weren't specific on the amount, but they said, yeah, we certainly got to do something to curb the inflation. So that puts the market in an interesting. We're already in a bit of a downtrend. You got a war out there. I think people are buying stocks out of I really believe it's about the whisper. If you can beat the whisper, like if earnings come out, let's say you made $1 on your earnings, but your stock will go down if they expected $1.50. And yet, if your earnings you're expecting to lose $1, your stock goes up if you only lose 50 cents. That's kind of how I feel about the market today. Is people thought, all right, war over the weekend, Ukraine's holding their own, that's better than we thought, so let's buy stocks. Is that the rationale? I don't know.
I think so.
I'm guessing. I don't know. You never do. You never do know. But great mentor club nonetheless. Let's just end looking at that theta again. Gee whiz, dude.
Well, that's been the focus, and when we beta weight the whole portfolio, we probably will get a little NA because we have a handful of positions that are not. But that brings the delta down. So some of the stocks are not doing a good calculation on the beta.
Yeah.
That's one of the reasons I've got it kind of parsed out into the new layout is I can isolate the candidates that aren't giving me a good beta. And I've got the portfolio for the most part neutralized and hedged down to a very small bearish delta.
Slightly. Well done, sir.
And that's just kind of, it hasn't been a ton of activity. A lot of people out there are being hyperactive, short-term traders. I've been much less active as far as the strategies. There've been patient strategies with credit spreads out of the money and just kind of watching and waiting and making sure they don't go bad.
A lot of callers, a lot of theta. It's kind of where we want to be right now. I like it.
It makes the day-to-day operation of watching the markets less stressful. Like I'm not as anxious about watching the market every day.
You know what? Before we sign off, I forgot. Do we want to talk about our Bitcoin? We usually do that.
By all means, that's your specialty.
That's not my specialty at all. No.
Well, it sure is fun to listen to you talk about it. How about that?
I don't know if it is. There's not much to report today. Let me get the thingy here. Make presenter. You tell me when you can see my screen.
I see it.
I see it. Can't adjust my stuff here. Let's get it adjusted. Here we go. So Bitcoin's at 41. This is astounding because this account started with $56,000 in it, and Bitcoin was at 55,000 when we bought it, and Ethereum was at 3,600 when we bought it, I think, or 35. So we're down tremendously in both, and yet we're down what, $2,000, $1,600 off what we started at. I don't know, 55. We started with 56, I think. And I sold. We got 4 Ethereum now. We did get that put to us at 3,000. So we've got more Ethereum. Thing is, we've just generated so much income off doing all this. So there's this one, and we only got 750. It's actually gone up a little bit, and I don't know, maybe we get called out at 45,000. If we do, we'll be up a lot more than we are now. You know, it'll be
Yeah,
pretty
that
cool if we get
that
called
would be
out.
okay. Well, and
I'll,
that just go back to
yeah,
selling puts to buy it, right?
I'll still puts to buy it, and I'll sell them at the money. Um, so that would be just fine. The at the money put is pretty rich right now. This would be an interesting thing. You make $1,000 on this because it's at what, 41? You buy it at 40,000. That's $1,300 to $1,500 you make by agreeing to buy it at 40. And that's pretty good, making $1,500. You got the intrinsic of 1,000.
Yeah.
So if you're thinking about buying Bitcoin, there's your chance to get paid to buy it. Pretty crazy. Get paid 800 to pick it up at 35. That's not bad either. Get
Not a
paid
bad deal at all.
850, 900. You could probably get $900 to promise to buy Bit. That might be a nice trade if someone was brand new to Bitcoin and wanted
Yes.
to get into it now, because didn't you mention the support?
Right. And if they really wanted to own it and they were okay with owning it at that price,
Yeah,
you got the capital to do it. That's you can position size proportionately to your account
yeah, if you
size.
were a technical analyst, you'd say, well, my support's at 35. That's what I want to buy. So that
Yeah.
would be interesting. Um, let's see. We've got Ethereum. I traded some more on Ethereum. That one we got put to us is right here. So I sold a call where I'll let it go at the same price I bought it at, which I'm absolutely fine to do. We only got paid $110 for it, but all that adds up. And even there, that's a pretty good percentage if you were to annualize that, isn't it? Not bad.
Yes, it is.
So that's it. Nothing really fancy to report on it at all. This is all positions that are cash flowing. $240 on that position, 110 on that position. We got our short put, willing to buy it at 2,000. We got $130 on that position for buying it at 2. So I don't know, what is that? 130, 110 is 260. Is that right?
Yeah.
Okay, let's do this math. 130, that's going to be 240. And then add that 240 and 240. Do I get all that right? That'd be 480. Dude, that's like a rental house
That's not bad.
if you add all
Why would
those
you
together.
capital
If I
outlay
did
in
it
a
right.
rental house?
240 plus 110 is 350, plus another 120 is or whatever it is. So pretty good. And then our Bitcoin, what did we make on that? 750. So altogether, we're making $1,000 a month on our crypto cash flow. That's pretty cool.
That is
So that's,
pretty cool.
yeah, that's it. What I think is most fun is the evolution from cash to asset. That's what I think is most fun. Is we started with 56K in cash, and now um, we have a Bitcoin, and we have 4 at ETH now. And that stuff is cash flowing us. And so asset minus liability is net worth of 56K. Asset minus liability is net worth of 54, whatever it was, 54, 500 or 600 or whatever it is. And so, you say, well, you're down in your net worth. Yeah, but we have these tools now that are making us $1,000 to $2,000 a month. We have these machines in here that are cash flowing, and this can't make $1,000 a month, and these instruments can. So I've survived going up and down. What's really interesting is how much Bitcoin's gone down and how much ETH's gone down, but we've taken the cash flow and bought more of it. And so we've gone from no assets. Well, we've got from a cash asset to a 5 coin uh, all in real time. That's what was the most fun about doing this is we said, let's do this for the students. And so I just started with that amount of cash and threw it in there for the students, and it's kind of a fun little experiment. Um, some people have 50 grand laying around, some people don't, but you can scale this down to whatever or up to whatever you feel you want to do with it. So again, every time we talk about this, I try to emphasize it's not about the darn Bitcoin. It's about the principles that we taught. We spent a lot of time last week. If you missed last week, we spent probably an inordinate amount of time on that actually.
Yeah.
Talking about the basic financial education around it. So I'll make you the presenter again, and I guess should we end on looking at the RSX or what?
RSX is down. What I was thinking, Andy, is those principles we're talking about on Bitcoin and cash flowing. We could always do like
what would be interesting? Hey, this is a paper trade account. Hang on, this is a paper trade account. Well, that means we can do stuff just for educational purposes.
Absolutely.
Let's sell a put on the RSX just for fun. What do you think about that?
I have no problem with that. In fact, I think I already had the order ready to go. Let's double check that.
Yeah.
Yep, there we go. I'm going to hold out for 40 cents and see if we can get filled for 40.
Yeah, we'll see.
And that's 10 contracts, and so that's a promise to buy it down at 5. So we're promising to buy it down at 5. There. Yep.
I mean, you got $5,000 risk, and that means that the whole Russian deal is just pretty much done. I mean, it'd be interesting to see what the actual stocks in the ETF are. The chances of all of them going completely to zero are probably pretty small. Isn't it interesting?
You can always look up RSX holdings. That's not too hard to do.
Always buyers coming in. Let's see, they got basic. They're gonna have energy, I'd imagine, all over the place, wouldn't they? Who knows?
Got a couple banking stocks. I'm familiar with Lukoil and the metal stock and
energy.
There's Novatech. There's the Yandex.
Industrial oil, polymetal. It's going back in time, isn't it? It's oil and gold, and it's commodity stuff.
They are heavy on oil, and all those sanctions don't seem like they've carved out oil and gas exceptions. So
if they do, this thing does go down even further if they do.
Well, and what's the other thing they did? They regulated them on the SWIFT banking system, and
I've had a hard time with that because half the people are acting like that's a death blow, and the other people are like, there's other avenues.
Well, I just read another article, Andy, that's saying, well, if they run into problems with SWIFT banking system, they just shift to cryptocurrency, and then voila.
And crypto is actually a very efficient way to move large amounts of money. Very efficient. Billions of dollars for not very much. So. Yeah, I mean, and Putin going after his personal assets, his lifestyle won't change one bit. He's so rich that it's like, he's eating the same meals. I guarantee you, sleeping in the same bed. I guarantee you. I wonder if what's interesting is the isolation from COVID, and is that an effect on him? Wouldn't that be an interesting aftermath of COVID if the isolation of COVID made Vladimir Putin crazier than he is?
I should not laugh at that.
Oh, he's nutty.
Sounds like the plot to a Bond movie or something. Who knows?
Nutty. He is a scary dude. Our hearts go out to, again, the people of Ukraine, particularly our students that are there. We know that trading stocks probably not on their mind and their priority, but hopefully they've been able to get some hedge and haven't had, of any group that would be listening to hedging and the concerns of currency and inflation to be them, because they've lost they're right now they're losing money, yeah, but the loss of life is and peace and terror is much bigger,
Yes.
obviously much bigger. So with that, we'll see everyone next week.